Now, first, let's start with the technical picture. As you can see on the chart, gold made a very strong bullish rally from the previous demand zone and continued printing higher highs with strong momentum. But right now, price is starting to slow down exactly under this marked weekly bearish rejection zone, around 4750. This is a very important area because it previously acted as strong resistance. Sellers already reacted from this zone, and price is struggling to maintain bullish continuation above current structure. At the moment, gold is consolidating around the 4706 to 4713 range, and this area will decide the next major move. Current market structure. If you look carefully, price is still respecting this short-term ascending trendline support holder. However, buyers are no longer showing the same aggressive momentum we saw during the impulsive rally. This usually indicates exhaustion in buyers, liquidity building, and potential setup for a larger retracement. That's why I personally think gold can still push slightly higher into the weekly rejection zone before a deeper sell-off begins. Bearish scenario. Now, this is the main bearish setup I am watching. If price taps the 4745 to 4750 resistance zone and starts rejecting with strong bearish candles, then we can expect a break below trendline support liquidity sweep under current lows and continuation toward lower imbalance zones. The first downside target will be around 4670, then potentially toward the 4600 major demand zone. And as you can see on the chart, the full target area is sitting around that lower discounted zone where price can later look for new buy positioning. Bullish invalidation. For buyers to regain full control, gold must break and sustain above the weekly rejection zone. Buyers need strong candle closes above 4750, and market structure needs confirmation.
Otherwise, every push upward right now can simply become another sell opportunity. What I am expecting. Personally, I think gold is currently creating a trap environment. Why? Because retail traders are chasing buys after the rally, but smart money usually distributes near premium zones. And this weekly rejection area is a very dangerous zone to blindly buy. So patience is very important here. Wait for confirmation, volume, and clean structure before entering any trade. Fundamental and macroeconomic analysis. Now let's move toward the macroeconomic and fundamental side, because right now fundamentals are heavily influencing gold volatility. Recently, the market has been reacting strongly to Federal Reserve policy expectations, geopolitical tensions, inflation uncertainty, and US dollar strength. The Federal Reserve still remains very cautious regarding interest rate cuts, and strong US economic data continues supporting the dollar in the short term. At the same time, geopolitical uncertainty and safe haven demand are still keeping gold structurally strong in the long term. This is why we are seeing aggressive rallies followed by sharp sell-offs, because the market is constantly repricing expectations around inflation, yields, and future Fed decisions. Another important thing is that higher oil prices and stronger real yields are currently creating pressure on gold. When yields rise, holding non-yielding assets like gold becomes less attractive for institutions. Meanwhile, the US dollar is still finding support from resilient labor market data, strong manufacturing numbers, and capital inflows into US assets attractive for institutions. Meanwhile, the US dollar is still finding support from resilient labor market data, strong manufacturing numbers, and capital inflows into US assets. So fundamentally, short-term volatility remains very high, but long-term safe haven demand for gold is still active. That means traders should avoid emotional entries and focus more on confirmations and risk management. So overall, gold is currently trading inside a critical premium zone. Weekly rejection resistance is still active, and a larger retracement can happen anytime if buyers fail to break above resistance. Key levels to watch: 4750 resistance, 4706 support, 4670 downside liquidity, and 4600 major demand zone. Trade smart, manage your risk, and never chase candles in volatile markets like this. If you enjoy these daily gold breakdowns with both technical and macroeconomic analysis, make sure you like the video, subscribe to the channel, and turn on notifications so you never miss the next update. And if you want to learn market structure, liquidity concepts, smart money trading, and real risk management, you can message me directly on my Twitter for my mentorship program. Trade safe, wait for confirmation, and I'll see you in the next gold analysis video.